really tough for the markets to get traction with gold up here. Very difficult. Because if investors are putting their money in the gold, they don't have money to buy equities. And what you will see is if for some reason the dollar gets a pop, life is great, something gets resolved in terms of the trade war, dare I say that phrase, and the dollar heads up, yields sag a little bit, which would be good, and you see gold start to come down like this. That means they're selling gold, they're bullish on the dollar, and that means they'll start buying equities, and that's when we start flipping our positions to calls. Is that clear to everybody? Look at the failure here. It's really struggling. If this was going to be a rally, wouldn't it just go? And then a return to this. The first thing I showed you today. The SPY 15-minute chart. Remember, yesterday's close, that's Friday's close, and the pre-market high. Now we went all the way up here. See how it banged up against it? You broke through. Look what it broke through to. Does everybody see the level that it has recently failed at? Now, it doesn't mean it's a failure the rest of the day, but you guys see these two wicks here? Everybody see what the price is here? Is this starting to make some sense? Do you see how it failed at 590? Why did it fail at 590? Because there's a ton of 590 calls there and the market maker doesn't want to pay them. So that's when the market maker starts to dump. So if you're sitting on 592s, 594s, 595s, and this thing gets that back below the pre-market low, you're going to get out of them, which is what the market maker wants to do. Wants to chase out those out-of-the-money calls the way they chased out the out-of-the-money puts. And over the course of the day, he moves it up and down. And so that at the end of the day, when he gets the final, set of feedback numbers and says, you know what? There's still way too many of them up here. And if this thing spikes at the end of the day, you're going to have to pay these people. Okay. Then the market maker buys it up and shoots that thing up. Why would he do that? Because he needs the stock. Because what if these call holders exercise their right? I want the stock. I am a buyer of an option and I want it. I want whatever it is. I want the SPY at 592 because I think it's going up to 600. Give me the stock. If the market maker doesn't have the stock to give them, that means the market maker is going to have to buy it at whatever the close is today. Let's say it closes at 593.50. The market maker would have to buy it at 593.50 and then give it to him at 592. That's a loss. The market maker cannot abide that. So the market maker, before it gets up here, if the feedback is that there's just too many calls up here and it's possible that there could be an algorithmic spike of the hedge funds. Now remember, hedge funds and market maker are not in cahoots. This dude over here is hoping that the hedge fund gets out of those calls. But if he says, nope, nah, I'm holding my 592s and 593s. In fact, I'm going to buy 594s and push this sucker up. Well, if he does that and other hedge funds do it in the last hour of the day, then the market is going to go up. The market goes up, then these calls that were out of the money are now in the money. Puts the market maker on the hook. So the market maker says, all right, fine, we'll destroy the puts today completely, and I'm just going to have to buy this sucker all the way up. That's when it breaks these levels, and that's when it shoots up even higher.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.